Hi everybody, welcome back to another video. So, investing is very important as a head start to achieve financial freedom. With recent macroeconomics, investing is even more important to beat inflation and have good opportunities for you and for me to invest in good companies that will compound over time. However, it's important to have a balance of portfolio and keeping money for the rainy days so that you will not have to be forced to sell your shares at unfavorable times or discounted prices just to pay off for your needed expenses. So in this video, I will list the different ways of earning higher returns with your cash and how to start investing in Singapore and the opening of CDP accounts and explanation of the different kind of brokers. So let us list out the ways that you can invest in different types of assets. So firstly, there are treasury yields. So treasury yields are usually given by the government. So therefore, it's important to buy treasury yields from reliable countries such as the United States or Singapore. So let's take Singapore for context. So Singapore usually issues a 6-month T-bill and at a yield of 3%. If you invest of 10,000, you only have to pay 9,850 upfront. And when it matures after 6 months, you will be able to receive back the full 10,000, thus allowing you to earn $150, which is the 3% annual. So next kind of investment is the AAA grades kind of bond, which are essentially the government bonds. They are called AAA because it's guaranteed to give you the money, or most probably they are very, very safe. Bonds like this are usually for the long terms, and they are quite different from T-bills because they give semi or annual payments depending on how much you invest and depend on the interest of the bond that is being announced. So an example would be this calculator where at the effective return of 2.9%, you will receive 138 per every 6 months. Bonds are very good for keeping cash in a reliable assets and getting reliable yields for the long term. Because as you know, before COVID, the interest rate was very low as there was deflation rather than inflation. Inflation only occurs recently and therefore causing the interest rate to rise up to extraordinary levels. However, I'm confident that it will not sustain and it will go down in the long term, and bond yields that are giving higher than the inflation would benefit in the long term. So another kind is for the shorter term are fixed deposits in banks. These are usually for emergency funds that is flexible for withdrawals. However, do take note that having fixed deposits do have a risk that when the fixed deposit matures, you will have to renew your deposit at a different interest rate. And if the interest rate drops, banks definitely would drop drastically in the interest rate that they offer for your deposit. So do take note of this risk as compared to bonds which are able to fix the yields for the long term. Similarly, with the high interest rate recently, putting your money just in saving accounts such as the OCBC 360 or the UOB account are able to give you a very high interest rate. However, this is similar to fixed deposit where the interest rate is not guaranteed for the long term as well. Next point might not be an investment, but it's also a very important thing that I feel that everyone should also know is the usage of the right credit cards, as they provide additional interest rate to your savings account for some cards and also gives cash rebates, or if you know how to use mileage properly, I feel that it will save a lot of your money. The last category is my favorite, which is to do investment regardless of funds, indexes, stocks, or REITs. It's definitely more volatile, but with the right fundamental and choices, it will definitely give good returns in the long run. So due to recent high interest rate environments, safe assets such as putting in banks, fixed deposit, and bond yields and treasury yields are rising in yields. So because of this, stocks and REITs are definitely badly hit because they are considered the more riskier assets. And as risk-free rates rise, these valuations for stocks and REITs will drop. So currently, if we look at OCBC 360, they are actually giving a very attractive effective rate of 2.5%, 1.5%, and 0.6% for different kinds of category. And with an investment of 100,000, you can essentially get an effective interest rate of 4.65% a year just by putting your cash of 100,000 in and spending all 500 every month with your credit card. Similarly, if we look at the UOB savings account, at the 100,000, which is 30 plus 30 plus 15 plus 25, you will get an effective interest rate of 7.8% just by fulfilling two conditions, which is first, to spend $500 monthly on their credit card, and second, to credit your salary into the UOB One account. If you're not working, don't worry, you can also make 3 gyro debit payments per month to qualify for it. However, let me emphasize again is that the importance of the environmental interest rate will badly affect it. So in the event if interest rate goes down sooner or later, the current yields provided by this savings account may not last throughout many years. Therefore, having emergency cash in this kind of environment definitely is good, but there also must be a balance between the investment and having cash in savings account so that in no matter what kind of macro environment you are in, you'll always be able to benefit from it. So how do you actually even start investing? So investing has always been one of the higher risks but also higher returns. However, in the long run, if you start investing early, odds of having a higher return is definitely better. So in order to start investing, brokers are required as they are the middlemen to help you to purchase and hold the stocks. Because of this, you can actually search through Google search on finding the best brokers in your respective countries. And for my country itself, there are quite a few to list it out. So for Singapore wise, there are two kinds of accounts. One is called the CDP linked accounts. The other one is called custodian accounts. So let us take a look into the difference between these two types of accounts. So when it comes to CDP linked accounts, it gives the shareholder the luxury of holding their own shares and having the rights to attend shareholder AGMs and voting rights. This is very important for SG stocks which do not have live telecast recordings of their AGM and will require people in-person attendance to get valuable information out of the AGM. However, they tend to have much higher transaction costs than custodian fee at around $25 plus per pax per transaction. Brokers such as UOB Kay Hian and DBS Vickers are reliable brokers, and even in the event if the brokers collapse, you are not affected as your shares are being held in CDP account of your own. So the advantage is that usually people will hold it for the long term because of the high transaction costs. However, if you are making huge amount of purchases, this kind of transaction fees shouldn't really be a bother or a problem to you. So there are two accounts that you have to create. Firstly, create a CDP linked account in the SGX website. After creating it, you have to create another account or through a broker, either one of the three listed here, or there are other CDP possible accounts, brokers that have the function. After that, once you created the account through the broker, you will have to have a account linkage request form that will link your CDP account to the broker. And from there, you can just seamlessly purchase through the broker and you will be issued the shares directly into your CDP account once the purchase has go through. So this will allow the shares to be directly held under you, and when you log into SGX, you will see the amount of shares that you are holding directly as compared to custodian accounts where the shares are actually held by brokers. So custodian accounts are shares held by brokers, and if you have followed very closely to a lot of financial YouTubers, there are actually a lot of sponsor or marketing issued by all these brokers such as Tiger Brokers, Moomoo, and Interactive Brokers. So usually they have way cheaper transaction costs of around $3 to $20. However, these shares, since they are not held under you, you are unable to attend AGMs or have voting rights. However, they are much more seamless or easy to use because only one account is required to be created and you can fast deposit in and start trading. Usually, these kind of apps are good for trading as well due to the low transaction fees, and their apps are much more friendly, and because of competition, they offer good features for you to analyze on the share prices or the trends, as compared to CDP link brokers or the bank account brokers where there are limited features and you have to top up or pay for it. So I hope this explanation would give more clarity into how to start investing or the different ways to invest in Singapore. So you can leave a comment on what accounts or which accounts are you currently using or prefer, or is there anything that you would like to ask? Please drop a comment as well. So next, I'll talk briefly about the stock lessons that I've learned through the year 2022. So firstly, it's always important to invest in profitable companies or positive cash flow companies, because in the event if environment turns bad, companies that are non-profitable will be punished the most or badly hit, because two things will happen. Firstly, share price will crash as people start selling due to fear. Moreover, because these companies are not profitable, they have to issue more shares in order to raise capital. However, if the share price decreases, they will have to raise way more shares in order to obtain the same amount of capital from the stock market, which means that the rate of dilution increases, and all these shareholders that are holding it would definitely be at a disadvantage. Secondly, having a cash position set aside to buy when there's opportunity is a very good idea to have, because it puts you in a position of strength and to take advantage of the market crash, and you do not have to force to sell in the event if you need some money for your expenses. Moreover, companies with a lot of cash also have advantages to purchase cheaper assets at discounted prices during a recession. Thirdly, do not underestimate the effects of interest rate. As interest rate increases, it can undermine the stocks and hit stock prices and REITs very badly. And it makes sense because safer assets such as T-bills or bonds or even fixed deposits are giving a higher return. Therefore, it relates back to point 2, when having more cash on hand, you can buy stocks and REITs at cheaper valuation, and this will allow your returns to be much higher. Lastly, it's about having a balance of growth and dividend or safe stocks. So it depends on what is your appetite for risk. So dividend stocks are good for people who are into their later stage of life or in a stage where money is very important. So having a consistent cash flow through dividend is a good option, and they tend to be more stable as compared to growth companies. So growth companies would be such as Tesla's or US growth stocks, which give much bigger return in the long run, but they will have huge fluctuations. So therefore, it's very important to follow companies that you invest in to ensure that you are investing in the right company fundamentally and they are doing well. So I hope this video has helped to clarify some questions regarding how to start investing and alternative ways to invest safely. I'll leave the links of the different research that I've done below, and you can refer to them for more information. Thank you so much for watching. Please hit like, subscribe, and leave any comments on any queries or what would you like me to work on next. Thank you, and to the next video.